Hi everyone, it's Leah Cost with the Mortgage Center, and I wanted to talk about CMHC fees, also known as Genworth fees, AIG fees, Canadian Guarantee fees. I'm trying to list all the companies that are out there that do insurance, but it's also called mortgage insurance. Now in this blog, I'm not getting into exactly what mortgage insurance is. I can give you kind of the Coles Notes of it, which is this is mortgage insurance that is a mandate by the government that you pay if you put less than 20% down on the purchase of a home or a refinance, and this is insurance that actually doesn't protect you. This protects the lender, and it's a very good thing that it's there. This is why our economy didn't take a total tailspin, much like our fellow people down south in the US. So it is a very important thing. Check out my other blogs if you want to know exactly what this mortgage insurance is, especially if you want to contrast between the mortgage insurance that you would get to protect yourself. So, that said, the common questions that I get about CMHC or mortgage insurance fees is, how can I avoid them? How can I reduce them? Is there some sort of private sector out there? Is there a way of just not paying it and not telling anyone? What's the slap on the wrist? Well, unfortunately, there is absolutely no way of avoiding this. It's automatically worked into your mortgage, and it's a government mandate. You can't get around it. The notary knows it has to happen, the lender knows it has to happen, and automatically when you apply for a mortgage putting less than 20% down, you're going to have to pay it, okay? And again, it's a very good thing for our economy that it is in place. That said, if you're looking to avoid it altogether, the only way of doing this is saving up at least 20%, or if you're going to refinance, leaving at least 20% in your home. Then you don't have to pay it. However, there are still some instances, typically more for self-employed people or rentals, where you will have to pay it, but those are somewhat rare occasions, and it's typically for much higher risk files. So that said, for the most of you, you're not going to have to worry about it if you have 20% skin in the game. That said, if you're looking to reduce the amount, the longer of an amortization that you take, the higher of the fees that you'll have to pay. The other thing is that the more down payment that you put in, the less you're going to have to pay. So someone putting 5% down is going to have to pay higher fees, percentage-wise, than someone putting 15% down. If you get a 25-year amortization, you'll pay less than if you had a 30-year amortization. So it's basically just, the higher the risk, or the longer it's going to take to pay back, the more you're going to have to pay. Oh, there's my doggies. Shush! What are you barking at? So that's kind of how that works. If you have any questions about the exact percentages, I'm not going to go over that in this blog, but maybe I'll do one down the road. But feel welcome to email me if you have questions about it specifically. But otherwise, that's how it works. It's in place for a reason. It's a very good thing that we did have it in place and still do. But that's about it. So if this video was helpful, please do give it a thumbs up. Don't forget to subscribe so that you don't miss the rest of my videos that are going to help you out with understanding your mortgage. And I guess that's about it. So leave a comment for me down below or email me. Contact me. I can give you a pre-approval right over the phone. But that's all for now. I'm Leah Cost with the Mortgage Center. I am a Canadian mortgage broker, not able to help you guys in the US. I'm sorry. But hopefully I'll be talking to you soon.